everybody. Hey, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Wednesday, ladies and gentlemen, the 29th of October. This is a quick video preview for the webinar, which is going to happen in a few moments. We're going to talk about what's happening in the world right now. We have the US leader running around Asia making deals. We have the final meeting between the US and the Chinese leaders tomorrow. And also today we're getting the two central bank interest rate decisions, the BOC and the Fed. So keep your eyes on that, but of course about all this and a little bit more in the webinar right now. So stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday, the 29th of October, 2025. And yes, I want to welcome all of you to this special day where we're going to get bunch of data. Well, no, actually, no, we're not going to get a bunch of data, but we're going to have two central bank interest rate decisions, so which could, in a way, move the market. So, look, before we go any further, as always, let's quickly have a read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm going to do my usual good morning in the chat room. Good morning, everyone. So, ladies and gentlemen, yes, feel free to ask questions if you wish. This is an interactive session. I have to remind everybody, so you can actually, ask questions in a way, or just want to chat about, want to share some information relevant to the market, then yes, this is the platform for you. Now, I hope you're all prepared. You have prepared your teas, coffees, or water just to kind of sit down and let go with me through the markets. Now, another thing that I want to mention very quickly is the Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, one thing that I wanted to do here in just a second, making a few adjustments. Okay, yeah. So, also one thing that I wanted to do, ladies and gentlemen, is to mention the webinar, which is going to happen tomorrow. Finally, we are, we're in that day. For the whole month I was promoting this, and the team here at Markets.com was also promoting this. Now, don't get me wrong, we had a few hiccups here and there. There were some issues with registration, then recently, after this weekend, I've noticed that we had the wrong time here. The GMT +2 it has to be, but before it was GMT +3. So before the clock we turned the clocks, it was GMT +3. Look, this whole clock changing thing is not really helping anybody, and I think that it's something that we went through a long time ago, and it's not really beneficial to anybody. Humans, animals, anybody. And I think it has to end at some point. We know that there was an initiative by the European Union in 2018. I think that some Parliament members raised their concerns, but it seems like it was very quickly put down. So yeah, but certainly, like I said, so we managed to fix everything on our side. And ladies and gentlemen, tomorrow, 16 GMT +2, so 14 o'clock GMT time, I'm going to hold the webinar, the third episode in the series where I talk about the most top used technical indicators for traders. And so the first one we did, I did was on MACD, then it was RSI, and now it's Bollinger Bands. So I think it's a great tool to use. I use it a lot myself. And what we're going to do, we're going to apply it in real live market action. So we're going to play some live trades in our demo account, and to see if it's any good. Should we kind of rely on it or not? Anyway, long story short, tune in. You can find the description, you can find the link in the description of this webinar, and I'll see you there tomorrow. Anyway, let's pick up on what's happening in the world today. Now, first of all, the day has kind of started with inflation numbers from Australia, and I think it's worth mentioning why. Because look, we were expecting already higher inflation numbers, especially on the headline year-on-year side. I mean, look at this. The expectation, the previous number was at 2.1. The expectation was for 3 and came out at 3.2. I really want to launch the chart here. I want to see. Oh no. Let's do it the other way around. Just a second. This is gold that I'm looking at right now. But of course I'll start off with Nikkei. But first, let's click on this one. Let's see the chart here. There we go. Look at this. So it's a very rapid jump, in my opinion, and certainly it's benefiting the Australian dollar, which I'll pick up in a moment. But it's in a way putting RBA in a very kind of difficult spot, I would say, because again, we know that the RBA is planning to deliver its interest rate decision in the beginning of November, and certainly what we're expecting there at the moment is no action. Basically, they will keep the rates unchanged at 3.6. At least that's what the current forecast is. And to be honest, I mean, they have been on a path of cutting this year. So in January, we started off 2025 with a 4.35 rate, and we ended up basically with a 3.6 up to date right now. So it's a decent decline, I think, a decent rate cut path. But the thing is that this is not really helping. So this is not really helping to, let's say, maintain, the whole rate cut path in a way. So I think that will be an option where they will have to say, oh, you know what, we're gonna maybe consider some hikes. But to be honest, I don't think that this is gonna happen like very soon, because what they might do is, if let's say inflation remains 3.2 or starts getting closer to 4 even, what they might do is they might kind of just continue holding the rate at the same level, and basically this way kind of supporting the Australian dollar. And but then in that case you will kind of slow the pace of growth in the ASX 200. But okay, look, you choose priorities, right? Anyway, so the number that came out yesterday was a very high one. Monthly CPI indicator, look at this, 3.5 as well. So everything is quite on the higher side. Japan consumer confidence came out 3.5 as against the 35.8 against the 35.3 previous. So that's not bad. Going further today, during the day, we're not really getting much stuff, but I think that it's going to start before or actually, sorry, not before, during the U.S. opening, during the U.S. opening hours. No, Bank of Canada interest rate decision. We are expected to see another rate cut. What's interesting there is that let's have a look at Canadian inflation numbers. So recently it started picking up. Yes, it still is controlled. It still is not far from the BOC's inflation target of 2%. That's why maybe the bank can afford to go for those rate cuts right now. So I think that what they're going to do is they're going to try to boost as much as they can. Yes, it might come at an expense of weakening Canadian dollar, but at this point, when you're seeing that they're having disputes with the neighbor down south, and that's of course that's where the Canadian economy is kind of in need of some sort of a boost, and this is where the rate cut is kind of coming in. I would say at a perfect time, because again, we know that right now Canada is not going through the best times. I mean, in general, the economy is still holding on, but But certainly these kind of trade disputes with like I said, the neighbor down south, does not bring much confidence for the investors, for foreign investors. So, you could see, you can see that issue happening there. Anyway, long story short. So what can we expect? Yes, today we can expect a 25 basis point cut. However, I wouldn't be surprised if we get a 50 basis point cut, just purely because of the situation with the U.S., their situation with the U.S. So, because recently, as you know, the U.S. leader decided to halt any negotiations with, with Canada. I mean, it smells more like politics, but yeah, it's a difficult one. Anyway, so we're watching this today. We're going to keep an eye on the reaction, on the market reaction. Then after that, we're going to get the pending home sales from the U.S. Yes, of course. After that, we're going to get the BOC press conference. You could see Canadian dollar moving a little bit more then. And then, of course, we're going to get some other stuff here as well. But yeah, the main focus will be on the interest rate, the Federal Reserve interest rate. And of course, we know right now that we are expecting a cut, so basically dropping the rate into the range between 3.75 and 4%. So the market is already kind of pricing totally that in, 99.9%. I mean, yeah, like, no, you'll never see 100 because you're leaving a little element of doubt as always, so 0.1%, I think, pretty much okay, right? But yeah, this is what we're going to be watching. So we know that there's going to be a cut. We know that there's going to be another cut by the end of this year. So basically by the end, there we go. So there we go. There's a 91% chance that there are going to be two cuts. And I think that this is what's going to happen. I think that they're going to stay with that. And that's not a problem. We already kind of know that. The market is rallying, anticipating that. So what I am careful about is, more like what's going to happen on the trade side if, U.S. and China are going to agree on something. So for now, regarding the Fed, yes, everything seems to be quite predictable, but there is still this little moment that I'm kind of thinking, what is he gonna say during the press conference? Is he gonna say that, what, we're gonna do the two cuts by the end of the year, and or when the press conference will come out, then he already has done one, so we'll do another rate cut by the end of the year. But then that's it. If something like this comes out, now this is where the interesting bit comes in. If something like that comes out, if he says suddenly that, we're going to do one more in December, and that's it. So the press conference is going to be the more important one to me personally, So unless the interest rate decision becomes not a 25 basis point cut, but a 50 basis point cut, now that would be a little bit of a different game plan. For now, I am, like I said, I'm going to be very careful here. Certainly listening into the Federal Reserve press conference, and like I said, if he's going to be a little bit more on the side where, we're going to, for next year, we're going to take a wait and see approach. We're going to see what's going to happen with the data. Because speaking of the data, look, fair enough. We got the inflation numbers last week on Friday, the U.S. inflation numbers but we're still missing NFP. That's something for next week. But we're still missing NFP for the month of September. I don't know if we're gonna get the October one, but and then we're missing some other key metrics. So initial and continuous jobless claims, I'm already not talking about those. Those are piling up. Look at the Thursday calendar. Where's that U.S.? Look at this. 1, 2, 3, 4, 5 numbers, and they need to come out. The continuing jobless claims, initial jobless claims as well. 5 number sets of numbers. I mean, this is not good, because then you're actually gonna debate and you're gonna um, try to understand, what's the kind of can we kind of trust the data? Can it be respected? The way it has been conducted, was it conducted okay? Because they didn't, they were in shutdown. Maybe it will take them time until it can normalize. So are they not going to be missing out something from the surveys and blah blah blah? So you see, this is the implication. I think that the fact that yes, the government has shut down, the fact that we're not getting the data, that's one thing. But the other thing is that how credible the data will be when it will start coming out. Now, this is of course on everybody's mind, and everybody's kind of worried that it's not going to be credible. Well, we'll see, of course, but at the moment, the whole hype is around AI mainly, and the upcoming deal with between the two leaders. Anyway, let's jump into the stock market here very quickly. Nikkei, look at this. I mean, this is just a bomb. I mean, it's like it has exploded together with the rest of the stock market. If you haven't noticed, we're hitting all-time highs everywhere. To be honest, this hyperbolic move, look at this monthly candle. This is a monthly candle. When was the last time we saw such a candle? Let me just check how much we have rallied so far. Actually, plus 14% in a month. I mean, we sometimes don't do that in a year. Now, if we actually take, let's say, actually for out of curiosity, 2023. Let's have a look at 2023 January. There we go. From here all the way to December of 2023, the end of December here, right here. So we did 30% here. In 2024, let's have a look. In 2024, from here till where's that? Where's that? December right here. There we go. We did 20% in a year. We're doing 14% in a month, ladies and gentlemen. That is just crazy. I'm not already talking about how much we have done this year so far. So there we go. Let's have a look. Let's have a look. So far, 28%. And what's interesting is that at 20%, and half of it, it's only in October. This is just, I mean, insane. Look, it's nobody wants to use the B word for now, the bubble thing, right? But is this a crazy, of course, look, there's debates. We can debate all that. We can say that it's a normal progress because technology is booming and technology is driving everything, Let me just double check what happened. Let me just double check what happened in the late 90s. So this is the rally we got. So the dot-com bubble. So it started off it's we started rallying right here at the end of 1998. Here you can look at this. For a couple of years we were rallying, and then basically boom, in March time we started retracing back down very heavily. So this was that drop. This was that major drop from here till here. Let me just actually double check. So we did 50 something percent. Yep, around 50% we gain in a period from roughly not a full 2 years. In not full 2 years, we did 50%, and that was seen as a big rally, right? So if we do measure the same kind of thing here, let's say we measure it from this 2022 period, actually the beginning of 2023, right here, the one that I have here. Oh, not this one, this one. So we have done 100%. I mean 100%, ladies and gentlemen. Wow, that is spectacular. I mean, talk about a, well, again, I don't want to use the word, the B word, the bubble, but it's absolutely ridiculous and crazy. And I don't know, look, of course, somebody might say, "Oh, but that's like normal." Normal market reaction. I don't really think that this is a normal market reaction. This to me does not look healthy. Look. I know that somebody would say, but yeah, these things happen in the market. Yes, these things happen, but do you understand that whenever we see something like hyperbolic like this, it does come. It is followed by a retracement, a strong retracement. So, long story short, I'm not gonna be, like I said, I'm not gonna start shouting for a reversal right now. I mean, don't get me wrong, there still could be some more upside, but to be honest, I mean, let me actually just try to see if there is any potential kind of target here for the Fibonacci on the Fibonacci extension, and for that I need a monthly chart, I think, because that would be a little bit easier. So if I'm gonna draw it this way, let me just see if I can make some sense here. This way, and that way. We have surpassed 161.8. Right. What if it's drawn this way? Yes, also then we have much higher levels above here at 59,500. I mean, that's wow. I don't think that this is logical, but even let's say, okay, let's get rid of that. Let's jump in a daily chart. Maybe the daily chart could shed some light on us here. But still, I think that this is the same problem. If we draw it from, it's the way you draw it, it becomes an issue. So if I'm gonna do it this way, let me just double check Nikkei. Okay, look, still we have numbers which are in like 55,000. With this pace, maybe by the end of the year 55,000. But to be honest, is this normal? I really don't know. I mean, because this is, to me, is way too hyperbolic. Is it? We're seeing rallies when the stock market is not getting important economic data from the US, and everybody knows that the economic data does not look good. We have there is a bad labor market in there, because there is a low job creation. Yes, people are still employed, but not a lot of jobs created. Tell me again why we need to go like crazy moves like that just because there is a company that decided to buy an AI thing, some sort, like where we still don't know the results that we know. Yes, they keep on promising that this is a game changer, like is going to improve. Whose life is going to improve? The company's profits, yes, it is going to improve. People's lives, that's a big debate, that's a big question. So you see, the tone of my voice is now changing, because when something becomes really unlogical and they keep on selling to you, they're thinking that you're stupid because they keep on feeding you with stuff that, yes, this is a great thing. To whom? To you? Yes. To me? I don't know. That's the issue. So long story short, like I said, I think we could still maybe go higher a little bit, but it certainly is a little bit a problem to me. Shanghai Composite, looking at this one, okay, this one's a little bit on the moderate side, but of course also it's just joining the bandwagon and jumping into the action because the two leaders are planning to make some deals. Let's see what's going to happen there, but certainly the fact that we broke the downside line here, I talked about this in the beginning, actually around closer to the end, around mid-October, I would say. I was talking about this and I said, keep your eyes on this downside line, taken from the highest point of 2007, because that's the financial crash that we had. So keep your eyes on this downside line, and if we can clear that and stay above it, then there is a good chance for this one to go further north. But if somehow this starts selling off like crazy, I would say yes, there is an opportunity for some lower areas. Let's keep an eye on that one. Let's jump into Dow Jones Industrial Average. Let's have a look at this one. New highs, new all-time highs. Look at this monthly chart. I mean, this is just crazy. But yesterday, let me just refresh my memory on this one, because yesterday we closed in profit. Dow gained around plus 0.34 percent. Nasdaq was to the moon, almost 1%. Look, nowadays, like, these big moves, if it's like 1% on Nasdaq, right? So this is going to be like 260 points, roughly. And yeah, this is a lot. Before maybe you were thinking, oh, 1% on Nasdaq, like, something 50 points or something. That those days are gone. Now, like a little up move, it's already a lot of points. So especially traders have to remember that when you're trading, um, when you are kind of thinking about positions, and like, and how much to, where to put a stop loss or something like that. Anyway, long story short, look, Dow rallied. So we created a new all-time high right here, 47,948 zone. Now everybody's talking about that 50,000 zone on Dow. Okay, maybe, but I don't want to rush into things, because certainly everything is up in the air right now. S&P 500, similar story, went higher. Look at this, created a new all-time high near the 6,911 zone. Okay, that's absolutely fine. What I can say here, right now, first of all, I want to get rid of everything, remove all the drawings on the S&P. It needs to correct. I don't see this one like going further. I do see this one potentially going further after breaking the 6,760 kind of 4 zone. But again, do I think that this is a little bit overextended? Yes, because I will not lie. I'm going to be that party pooper that's going to say, you know what? No, I think this is a little bit overextended, because give me the data. Show me that the economy is doing well, and don't tell me about those front kind of picture, deals that are done for the TV, and then basically, we know that some of those deals, some countries cannot deliver on those deals. Like, for example, the US and the EU deal, right? Is the EU going to be able to deliver everything what they promised in there? 750,000 worth of like goods traded, and 600. No, wait, it wasn't the opposite. I can't remember. The 750,000 billion on trade and purchased goods from the U.S., and then 600 billion on energy. I think that's the opposite way. Anyway, but it still doesn't matter where you're going to get the money from. Are all the leaders all the leaders of all the countries in the European Union, are they all going to approve that? Still, should be a vote. But you see, this is the thing. You get the headline, you get the beautiful picture out. The market rallies on hope. But then the house of cards will start falling apart, because you're kind of not releasing the main data, because you conveniently went into a government shutdown, so that you could make those big deals, so that big corporations could create those other AI deals and kind of feed the market with that. Yeah, this is, like I said, this is a bit of a weird moment right now that we're seeing in the market. Nasdaq, look at this, the technology Nasdaq. Okay, first of all, the idea worked out. Don't get me wrong, but I had a price alert here. Let me just get rid of it. The idea worked out. It pushed higher, but these gaps, the runaway gaps, these will have to end at some point. But at the moment, it is. Wow, looking at Nasdaq right now, it ended at 26,012. Yesterday it rallied all the way to 26,087. The cash index, from what I see right now, is at 26,150. Wow. This is just, like I said, this is just crazy, ladies and gentlemen. This is not, like, I don't know, it's very weird, and this is like, I don't know, like I said, we're getting fed with, okay, NVIDIA went for a deal with an AI company or chip or data center company. Great, wonderful. Is that enough? Is that representation of a real economy? No. So that's my point. Anyway, let's have a look at what's happening in Europe right now. So Europe is pushing higher, yes, of course, on the hope that that the two leaders are gonna find common grounds and they're gonna sign the agreements tomorrow. So of course, we're also in the earnings season. Let's not forget, we have the European companies delivering earnings, so those seem to be okayish. Oh, the recent one, the one that I found out this morning about that nvda is buying Nokia. Let me just, I have it saved already. So we saw they're, sorry, not buying, but they're in cooperation with Nokia. Look at this. I mean, this is just, is this not speculation or what? I mean, Nokia, once a big giant, a technological giant, with their phones and everything. Look at the stock here. At that time, $65 per stock. I mean, that was crazy. That was great. Look at this. This is the ADR. I mean, this is just, what can I say? This is just crazy, I would say. Like, I mean, these, okay, great. We made a deal. I think it's a little bit of a boost for Nokia, but okay, how long will it last? How long will this whole euphoria last because of this whole AI thing? Because I think that to a lot of people, AI is now becoming something of a kind of a, I don't want to say a swear word, but the hype is kind of fading away a little bit because people are now getting to understand that the complexities, the problems that will arise. Yes, and when everybody asks the same question of those leaders who are talking about how great AI is, how it's going to be great because it's going to save companies a lot of money, because what they're going to do, they're going to slash some jobs, but they keep on saying that people can go into other jobs and everything. Why don't you go to another job? Anyway, so that's what I'm saying. So because people don't care about other people, and this is the reality that we're seeing right now. Anyway, oh, and yes, of course, like as always, we're all focused about the final result, but the path towards that final result, it can be dirty, right? It doesn't. Nobody cares about that. Nobody thinks about the transition period towards the final result. Anyway, coming back to the German DAX situation here, yes, we're seeing some positivity. DAX in general, one of the best indices, Western indices that performing this year. Look at the action here. So this year, from the bottom of this year to the current levels, we've gained around 22%. 22%. Don't forget, Nikkei is freaking running crazy. Like Nikkei is doing 14% in a month. At one point, we were selling off, but I think that was a great speculation moment to buy some stocks, and there we go. Great result here. So this was the big board with tariffs that the U.S. leader held during the press conference. So at the moment, like I said, more buyers could join in here in a way if we break the upper side of the falling channel, because I said to you that we're currently in a falling channel. We're knocking on the door of that falling channel, upper side of that falling channel. The prevailing trend is to the upside, so the greater chance for this one is to break out higher. However, can we get that breakout? We'll have to wait and see. The FTSE 100, of course, I don't even have to say anything here. It just continues to rally, and that's kind of it, So the Fibonacci extension here is pointing towards the 10,000 zone. Okay, this is crazy, but is it doable? Yes. By the end of the year, why not? So this month we're doing plus 4%. That's kind of a lot for the FTSE. 6% we saw in January this year. Then we saw 4.24 in July, and yes, we're doing another rally here in October. So we'll see. For now, I don't want to rush into things. First of all, I don't like to buy at highs at all. At all-time highs. I like to wait for maybe a retracement. So, but that's me. And at this point, I'm just observing the price action. Yes, there is a chance for this one going further north, but let's be a little bit on the careful side. DXY is pumping higher, ladies and gentlemen. This is what's interesting. So if the stock market is rallying, why the hell a US dollar is not really selling off, especially giving the fact that we're gonna get a rate cut today, and we're gonna get a rate cut in December. So why are you still rallying? So what is this thing that we do not know? I talked about my ideas on DXY in one of my videos here on our YouTube channel, and I talked about where's that here in this one, in this session here, that was 2 weeks ago, and also can DXY steal the thunder from gold in the near term? So this is the little moment that I talked about as well. And since then, we had a retracement in gold. We're seeing DXY remaining at somewhat of highs, I would say. So, long story short, for now, I'm still considering this as an upside scenario, and I'm still aiming for the upside, just because I do believe that we could see the US dollar stronger, because people will remember, oh, hey, wait, we have DXY, we have the US dollar as a safe haven, because gold has dropped. Now maybe it's time for, for the US dollar to rise. But the problem is that we have the Federal Reserve interest rate decision, which, could be negative for DXY. However, we're going into the holiday period where the consumer needs to feel that the US dollar has some purchasing power, so you cannot really drop it way too much. So let's support the US dollar, and I think that the US consumer is a little bit more important. Why? Because if you're not creating more jobs, then at least give something to the people, right? Give some purchasing power, especially going into the holidays. And you also will drive the economy this way. It's kind of a win-win, right? Short term. The world is an interesting place. Let's jump into the Forex world, ladies and gentlemen. AUDUSD. Oh, by the way, and DXY, I'm cautiously bullish on DXY. Yes, going into the Federal Reserve interest rate decision, unless we break the upside line here, then I'm going to consider some moves lower. But until then, I will not really kind of consider the downside scenario, and that's kind of it. AUDUSD. So beautiful push higher. So look, this is an interesting moment here. Now I'm bullish on the Australian dollar, and I'm also somewhat bullish on the US dollar. But I think that the Australian dollar right now is gaining purely because of the risk on sentiment. Higher inflation, we got the numbers from Australia, so that's also giving a little bit of a boost. So in a way, keeping the RBA from kind of going for a rate cut. So in a way, this is kind of piling into a nice little positive moment here for AUDUSD, and we're seeing a break here. Look, I talked about this. If you remember, when we were still here without this rally, I said, look, it looks like a bearish flag. However, wait for the confirmation break. Did we get the break? No. So I said that if we start breaking, on the contrary, if we start breaking the downside line, now that's going to be an interesting moment. And there we go. We are going for we went for the break, and we are still, going higher. And I said to you that I'm going to aim for the 0.6629. For that, I'm still kind of aiming for this territory, and then we'll take it from there. I do like the idea of going for this downside line taken from the highest point of September of last year. But let's go slowly, okay? AUDNZD, similar story. After breaking the falling wedge pattern, we're pushing higher. We're moving towards the 1.1445. That's great. So let's say, like I said, for now I'm still bullish, and I'm going to aim for this area for the highest point of the current highest point of October, and then we'll take it from there. We're seeing strength in the Australian dollar across the board. AUDJPY here as well, the risk on, risk off monitor. It's pointing to the upside. However, we're approaching a key area of resistance. If we clear that and we stay above it, I'll go higher. Let's jump into EURUSD. So this one is feeling the heat a little bit because we are seeing a little retracement back down. And look, if you remember last week, or actually on Monday, I talked about this and I said to you, look at the formations here. What I was saying to you, that keep your eyes on this idea where we could see the fifth candle here to the downside. And this is what I said to you on Monday, that first we had a one big candle, then we have a three gradual candles to the upside here. Looks like a bearish three method. And the fifth candle could drop lower. It did not. Well, it's one of those moments. It doesn't work out. So that's why you always wait for, that moment. Wait for that development. So we had a further push higher. We found resistance near the 50-day EMA, shown as the green line right here. So this is where it held, and we're now seeing a drift lower. To be honest, as long as it stays below this area somewhere, below this 1.1645, I'm going to continue targeting the downside. EUROJPY, beautiful hold up near the upper side of this little box where we're currently trading in. So I'm gonna consider a little bit of a move to the downside within the box. Ideally, I would prefer to see a clearance of one of the sides of this range, but not at the moment. At the moment, we're observing this. And going further, EURONZD, where's my EURONZD? There we go. Oh, by the way, EURAUD, wow, very nice area of support. Look at this. Are we ready to move lower? Wow, this is going to be great. Let's see if we can break that, because Australian dollar right now is strong. The euro is not feeling the love, so hey, maybe, but again, don't get me wrong. We had a strong decline already, so maybe a rebound from here could be possible. Maybe we're just kind of, confirming something of a range here. Why not? But certainly we are at a very interesting spot right there. EuroCAD as well at a very interesting spot here as well, approaching key area of support near the 1.6170. So keep that in mind. Euro GBP, of course, look at this. GBP right now is not the the strong currency, and there we go. We finally got the breakout. And if you remember a while ago, last week, the week before that, I was talking about this pair. I said I have a love and hate relationship with this pair, and basically I look at it, but I don't like to trade it. So long story short, the prevailing trend was to the upside. I said that, yes, we were forming a triangle, we were coiling up, and there we go. We got the breakout, because the greater chance for this one was to break out higher. We got the move. Sometimes it doesn't happen, don't get me wrong, but that's why we wait for a confirmation break, ladies and gentlemen. Let's have a look at what's happening with the GBPUSD. I'm assuming, I haven't looked at it today, but I'm assuming it is low. Yes. So far, so good, ladies and gentlemen. Look at this. I had to sip a little bit of coffee. So far, so good, but it fell below the 200-day EMA, and now it's pointing more towards the downside, towards this 1.3142 area. Let's see if this is going to continue. Let me get rid of this. And for now, I'm going to remain bearish. I'm going to aim for that 1.3142, and then we'll just take it from there. GBPJPY, a similar story. Yep, drifting lower. Look at this. Boom. Drops nicely. And now we're resting on this 201.26. If we can get a nice clearance of that, wonderful. I will go further south. Let's have a look at the USDCAD, ladies and gentlemen. This is a pair that you need to keep an eye on, because we have the BOC interest rate decision and we have the Fed interest rate decision. So expect a little bit of action on this one, up and down, a little bit of choppiness maybe. So something to keep in mind, ladies and gentlemen. So keep that in mind. Yes. But am I getting bullish right now? No, not really, because I will be waiting for a push back above the this area, 1.40 maybe, ideally. Push back above the 1.40, psychological 1.40 could attract more buyers for the downside. For the downside, it's yes, so far so good. We're aiming for the 50-day EMA, the 200 and the 100. So long story short, for now, I'm considering a move towards these EMAs right here on my daily chart. USDJPY, okay, I talked about it. I said that, look, we have this little moment here. We could see a retracement back down after holding near this 153.27, so we did that. And now the question is, can we rebound and push higher? So we're forming something of a triangle pattern, and this way, what I'm going to do is I'm going to leave it here, but I'm going to get more comfortable with the upside if we do push above the 153.27. If we want to consider some lower levels, then yes, a drop below this upside line is needed. So basically, we're forming something of a triangle pattern, but we need a confirmation break through it. USDCHF. There we go. Look at this animal. Boom to the upside. Okay, pushing higher, pushing back up on the Fed day. Look, I think it's stalling right now, so this is where it's going to get a little hold up, but certainly let's not rush into things. For now, let's observe the price action, and yeah, if we continue to push higher and we clear the 50-day EMA, I'm going to consider some more upside here. I think there is potential to travel back to that 0.80 zone, the psychological 0.80, and then we'll just kind of take it from there. Ladies and gentlemen, gold. Look at gold pushing strongly to the upside after we created, a new low for the month. It's a low. When was the last time we saw this area right here getting hit, the 3,886? Look at this. It was back in the beginning of October. I mean, yeah, I mean, it was the beginning. So anyway, look at the month. In that case, look at this candle, the monthly candle. Wow, what a candle it was. So basically, at the beginning of the month, we were somewhere near these levels, 3,800, and look where we rallied to, 4,380. So basically, $500 more. So now we're trying to recover, and I think that there's a chance for this one to actually travel back a little bit more here. As long as we stay above the 4,000 zone, I'm going to consider a move back towards this 4,076, and then we'll take it from there. If we do get a push above the I think above this territory, above that 4,100, I think there is a good chance we could travel back up. So let's be very careful. Let's be very cautious for now. And I will say this way that I'm still somewhat positive on this one. If we do stay above the 4,000 zone, if we start dropping below it, I think that's opening the door towards that 3,800. Silver, good result here, good rebound, and yes, similar story. So look, first of all, I think we need to get rid of everything and start fresh. So yep, this is my monthly chart, and you know what, I think I'm gonna get rid of this here. Some of the lines I want to keep, but some of the lines I want to delete. So okay, look, very simple. Here if we do once again break back below this downside, this upside line, I'm leaning towards the downside. If we start pushing back above, now this is where the interesting bit is for me, at least. If we start pushing back above the 49.45 territory, somewhere around here, I will consider a move higher. Pretty much simple. Platinum, yep, trying to make its way back up, but not the most exciting thing. Palladium, after a good run to the downside yesterday, 1,350. Look at this. Boom. This is the level that I was talking about, ladies and gentlemen. Look at this. 1,350. It's just basically on the monthly chart near my 100-day EMA. We retraced, touched it, and rebounded. Amazing. What's next? Well, I don't want to rush into things yet, but certainly I'm watching what gold is going to do, and that's how I'm going to approach palladium. But in general, I do like palladium. It is a metal that is used in many things, so in technology and medicine. So I think it's catalytic converters in the cars, yes, as well. keep that in mind. So that's why, like I said, I think that this one is still destined to kind of potentially move further north. Cocoa, one of my favorite ones, and it's resting near this downside line, downside support line. So I'm still somewhat positive overall in this one, as long as it stays above this downside support line. If it does, then yes, I'm considering a little bit of a rebound back up. Soybeans, of course, China came out with the first time purchasing soybeans, and we saw a good move to the upside here in soybeans. Of course, this started rallying before that in anticipation of a deal to be made with the US. So yeah, okay, politics is driving this one. But look, from the technical perspective, I'm loving this area right here. Look at this. Look how well this area is playing out. If we can get a nice clearance of this territory right here, I think it's kind of really opening the door here to some higher areas, like of course 11. I'm not already talking about that, but maybe even going into 12 zone. Let's see what's going to happen. But soybeans certainly is at a very interesting spot. I mean, we look at this. I mean, we're forming something of a range here, so I think it's a very interesting area that we have approached. So let's see if we can clear the upper side of this range. WTI oil falling back. There we go. I talked about it, ladies and gentlemen. I said to you, I am still bearish. I'm still bearish, and I'm not really getting very comfortable with oil despite the big rally which we saw here. That was a momentum thing because they put sanctions on Rosneft and Lukoil, but look, it will find its way back into the market. It's not really something that it's good for the headlines to make some sort of a shock. But when you're like, oh, I'm imposing sanctions on these two companies, right? They will be created something else, But anyway, so it's not how the world works, and the headlines it's one thing, the media is one thing, but actually when you start looking into everything, it's actually all different. Anyway, so that's why I was saying, that's why I'm still bearish. Unless China we start seeing reports from China that demand is growing, and so for now it's an interesting moment here. Look, if we do drop and stay below that $60 mark, then yes, I'm going to continue targeting the downside. Brent oil, similar story. We're actually falling back below this $64 mark, so it's kind of pointing a little bit more towards the downside now. But hey, if we do fall back below the $62 mark, yep, I'm leaning towards the downside once again. Natural gas. Ooh, boom, natural gas. Look at this. I talked about this, and I said to you, keep your eyes on this. This actually looked like an interesting formation, to be honest, and like it looked like a bullish flag, some sort. But either way, I needed a confirmation break above the 3.58, and I got it. So we got the move, we got the break. So my next target is the psychological 4 level. And ladies and gentlemen, finally for dessert, let's have a look at Bitcoin. So Bitcoin did go higher. It did reach my 116,000 zone. I said that if we do push and stay above it, then I'll go higher. Also, I said that if we do push and stay above the 114 zone, then I will get a little bit more comfortable with the upside. But then this is the barrier. The 116,000 is the one that I'm watching. We tested it, but we didn't really stay above it, and we drifted back down. So long story short, for now I am just still considering this 116,000 zone. If we clear it, I'll go to the upside. For the downside, look, I'm gonna be a little bit more on the careful side here. I would prefer to see a drop below the 106,500 in order to shift my attention to some lower levels. If I can get that move, then great. More sellers here could join in. Bitcoin Cash, beautiful move here. Testing this downside line right here, taken from the high of the 18th of September, the highest point of September as well. So the question is, can we break this and can we go higher? look, we retraced back to that 23.6 on the Fibonacci retracement, which is drawn from the lowest point of April to the highest point of September of this year. You know, I'm not rushing into things because, again, there are some negatives around, and especially if the US dollar starts picking up the pace, then we could see this one actually, you know, drifting back down. So if you missed this breakout, which I kind of talked about several times last week, well, I think that at this point you probably need to wait a little bit. Looking at Ripple, good result here. It tested the 2.69 zone and retraced back down. It was a good area of support previously. Now it's taking a role of resistance. We can see that exactly. So yeah, this has kind of worked out. So for now, for me, I need to see a clearance of this area of this 2.69 zone. If that gets cleared, great, I'll go to the upside. Ethereum is okay. Look, with Ethereum, I need to remove everything and start fresh because some lines are a little bit in the way. So first of all, this is the area 4,293 that I'm watching very carefully, together with this 4,250. So this whole area I'm watching. If we get a nice clearance of that, then yes, I'm gonna go to the upside. Let me just bring an arrow here. But again, the upside, it's limited to this area right there, at least for now. For the downside, that's the line. Yep, I'm watching this little short-term tentative line in order to shift my attention to some lower areas. A break of it could attract a few more sellers here. Litecoin, there we go, beautiful move above the 100 zone, but we didn't really hold too much above that, and we drifted back down. So in general, the 100 level got reached. I talked about it. So now I need to see a push above the 100 level in order to shift my attention to some higher areas. Dogecoin is drifting back down as well. Good result, good breakout, but now it's time for a little bit of a retracement. Polkadot, okay, this one is tricky. We're holding above that psychological 3 level. If we do fall below it, I think that it's time for a consideration of some lower areas again. But I think that yes, I'm watching this little short-term upside line. If we can get a clearance of that, then great, more sellers could join in. Tron is, yes, more like a real currency, acting like more like a real currency. So for now, it's more pointing a little bit more towards the downside. Ladies and gentlemen, that is a wrap. So very quickly, tomorrow, find the link in the description of this webinar. Tomorrow's webinar, live webinar on Zoom. So it's an event where we're gonna, like I said, we're gonna play some trades on our demo account to check out if Bollinger bands do actually help out. Anyway, ladies and gentlemen, thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I shall see you hopefully tomorrow. But if you cannot make it, that's fine. I'll see you on Friday. Thank you very much, and bye-bye.